More than tens of trillions of Shiba Inu are currently at the peak of attention. Some people are concerned, while others see this as the best opportunity ever. Recent developments in the past week have garnered attention totaling over $1 billion US, and this is just the beginning. This is something we've never seen before. But what on earth is actually going on? Well, let's find out. Disclaimer. Today, we've been hit with news that sends shockwaves through the market. The spot Bitcoin ETF has just experienced its 5th consecutive outflow day. This isn't just another blip on the radar. It's a historic event, unprecedented since the ETF's launch a mere 2 months ago. The gravity of this situation cannot be overstated. With each passing day of outflows, the crypto market faces relentless downward pressure. But what's causing this exodus? Look no further than Grayscale's Bitcoin dumping. Once again, their actions reverberate through the market, leaving investors reeling in uncertainty. But here's something interesting. While lots of people are selling off their Bitcoin and other cryptocurrencies because the market keeps going down, there are others doing the opposite. On Coinbase, a popular platform for buying and selling crypto, something strange is going on. Every day, a ton of Bitcoin is being taken out of Coinbase, like over 15,000 Bitcoin just today. And it's not just a one-day thing. Over the past week, it's been 31,000 Bitcoin, and in the last month, a whopping 58,000 Bitcoin have disappeared from Coinbase. It's like someone scooping up all this Bitcoin while everyone else is selling. But here's the thing. It just doesn't add up. If there's this massive dumping of Bitcoin ETFs happening every day, why are we seeing this strange activity on Coinbase? It's like there's a missing puzzle piece in the whole picture. So let's find what is actually going on behind the scenes together. Grayscale Bitcoin Trust, or GBTC for short, which essentially acts as a converted spot Bitcoin ETF, has been experiencing significant dumping recently. However, according to insights from ETF analyst Eric Balchunas, these outflows are likely orchestrated by Genesis, a digital asset financial firm. As Bitcoin's price dipped below $64,000 on March 22nd, Genesis appears to have been strategically trading its GBTC shares to capitalize on the market downturn. Balchunas sheds light on this, highlighting that while GBTC saw outflows, it's mostly Genesis exchanging GBTC shares for actual Bitcoin, making it a net neutral event. In fact, Balchunas emphasizes that amidst this activity, the newly launched Bitcoin ETFs have been net buyers of Bitcoin, with approximately $1.2 billion flowing in over the past 5 days alone, despite the price decline. This insight challenges the narrative of a market solely dominated by selling pressure. Additionally, an observation from an ex-user suggests that a significant portion of Bitcoin flowing into Genesis's wallets could be linked to the outflows from GBTC. These revelations shed new light on the apparent contradiction between the massive ETF outflows and the unexpected accumulation of Bitcoin observed on Coinbase. It seems there's more to the story than meets the eye. Let's keep digging to uncover the full picture. So, while the frenzy of Bitcoin ETF outflows continues to grab headlines, there's another side to the story. Behind the scenes, other major players, often referred to as whales, are potentially quietly accumulating Bitcoin in substantial quantities. This accumulation trend is clearly visible on the Coinbase Bitcoin outflow chart. Typically, when we see significant Bitcoin withdrawals from exchanges like Coinbase, it's a sign that people are pulling out their recently acquired crypto assets with the intention of potentially holding on to them. It's a behavior often associated with investors who have confidence in the future of Bitcoin and are preparing to weather the storm of market volatility. And with Shiba Inu, we see something similar. Insights from the leading crypto intelligence platform Into the Block shed light on a fascinating trend of accumulation observed over the past month. Insights from the leading crypto intelligence platform Into the Block shed light on a fascinating trend of accumulation observed over the past month. According to data shared by Into the Block's anonymous content creator known as Slim Daddy, short-term investors have been busy bolstering their Shiba Inu holdings. In just the last 30 days, they've added a staggering 64 trillion Shiba Inu tokens to their portfolios, valued at a jaw-dropping $1.78 billion. This surge in short-term investor activity is remarkable, with addresses holding Shiba Inu for less than a month, skyrocketing by 278% within the same period. It's indicative of a growing interest among traders looking to capitalize on quick gains through Shiba Inu. It's worth noting that Shiba Inu's price experienced a significant spike earlier this month, prompting many short-term investors to cash out for profits. However, despite this, their overall holdings have continued to climb. Interestingly, the story takes a different turn when we look at long-term holders. Addresses holding Shiba Inu tokens for over a year have actually reduced their holdings by 9% in the past 30 days. This suggests a divergence in strategies between short-term traders and long-term investors. Adding to the intrigue, let's not forget that Shiba Inu's marketing lead, Lucy, has set high expectations for the token, anticipating it to surpass its all-time high before the next Bitcoin halving, slated for April 20th, 2024. For Lucy's prediction to materialize, Shiba Inu must rally at least 225% from its current price within the next 28 days. With such dynamic movements in the Shiba Inu ecosystem, it's clear that there's more to this story than meets the eye. Imagine you're at a bustling market where vendors are selling fruits and vegetables. Suddenly, news spreads that a shipment of apples has gone bad, causing panic among shoppers. People start selling their apples in a rush, worried about getting stuck with rotten fruit. But amidst the chaos, you notice something intriguing. While most people are frantically selling their apples, there are a few savvy shoppers quietly scooping up crates of them at discounted prices. They seem unfazed by the commotion, confident that the apples will eventually regain their freshness and value. Meanwhile, there's chatter about a famous chef planning to host a cooking competition using apples as the main ingredient. This sparks excitement among some shoppers, who believe that the demand for apples will skyrocket once the competition is announced. In this analogy, the market downturn and fear uncertainty are represented by the panic selling of apples due to the bad shipment. However, amidst the fear, there are smart investors accumulating apples while they're cheap, anticipating a turnaround in the market. The excitement about the cooking competition symbolizes the anticipation of future events, like Bitcoin halving, that could drive up the value of cryptocurrencies. As highlighted by one Twitter analyst, Bitcoin has experienced several significant pullbacks since the November 2022 bear market bottom. These retraces, ranging from around -20% to -23%, have occurred at various intervals over the past year. The current downturn, which has seen Bitcoin pull back by almost -18%, marks the fifth major retrace since the 2022 bear market bottom. This raises the question, does this pattern suggest that the crypto dip is nearing its end? It's certainly a thought-provoking question, and one that investors are eagerly seeking answers to as they navigate the ever-changing landscape of the cryptocurrency market. Well, as the saying goes, only time will tell. But according to some investors, the real excitement might just be around the corner. They believe that the true surge in prices will kick off after the Bitcoin halving event next month. With this anticipation in mind, it seems that we're in for some truly intriguing times ahead in the world of cryptocurrency. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you're curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.